One of the biggest first earnings reports of this season is Delta, and shares of Delta Airlines moving lower this morning. The company posting a record June quarter revenue, but they say that discounted airfares pressured earnings, which fell below analyst expectations. I had the chance to catch up with Ed Bastian, the CEO of Delta, to discuss the company's report, and this is what he had to say about the company's guidance. Let's listen.
Well, relative to consensus, we're guiding to a little bit of a lower range. It's exactly what I just mentioned in terms of the domestic market weakness in the lower fare category, the discounting, particularly in the lower fare airlines. The good news there is that that capacity is anticipated to be back in balance by September, and we see the industry pace with the supply coming out, and that will enable us, we believe, to be unit revenue positive in the month of September domestically.
For a deeper dive into Delta's earnings, we're joined by Nicolas Owens, who is the Morningstar Industrials Equity Analyst. Great to have you here on the show with us. All right, so are the street's expectations of Delta just too lofty, or is this kind of a symptom that we're expecting now, given where the consumer is moving?
I think maybe a little bit too lofty, yeah. What you've had over the last couple of years is just this record demand, record prices, and basically I see that as leveling off. And my fair value on Delta is $39, so kind of coming in closer to where I thought it would be. The quarter really didn't surprise me, and that the key story really is a little bit of price softening, as you heard from the CEO.
Nicolas, it seems like the read, at least from the street, is that maybe this signals the fact that there might be some concerns about the health industry-wide. Is that the right read here, and why or why not?
Well, Delta is kind of the leader of the pack. They're the first to report, and they have really the most, successful customer segmentation that allows them to record record or premium revenue and really great margins. I mean, 15% operating margin is quite enviable for an airline. And so if they're saying it's going to be a little soft in the next quarter, the assumption is that other airlines will be even softer.
It sounds like some of the demand, though, still remains strong among their consumer, which the CEO Ed Bastian pointed out to me is a more affluent consumer, is one that's looking to spend on things like prioritizing international travel. It's just kind of where those international travel routes, I guess, are in comparison to what we were looking at last year, when there was a lot of still the revenge travel that was in the tape. And it seems like some of that has moved towards the Latin America division, which saw revenue move higher by about, 4% in this most recent quarter.
Yeah, again, and so there's still plenty of demand for travel. You know, they're filling the planes. I think of it as a little bit of a barbell, in the sense that you still have, all the premium seats and so forth going well, but the price war, if you will, is happening in the back half of the plane. Where Southwest is cutting prices, and they're also under pressure from the even more discounted airlines.
Nicolas, when it comes to, I guess, some of the commentary coming out from management just in terms of capacity growth, that is going to be moderating here going forward, how big of a boost do you see some of those adjustments being to their business here, at least in the second half of the year? Or how quickly can we expect that to trickle down?
Well, they're targeting 3 to 5% capacity growth in the second quarter, and only 2 to 4% revenue growth. So, and 2 to 5%, or whatever that is, 3 to 5% capacity growth is pretty slow compared to the last few years. You basically were lapping the 2019 capacity levels, and basically coming off of these sort of record high revenue yields.
Nicolas, while we have you, one of the huge things that actually kind of jumped out to me in my conversation with Delta was really around some of the hiccups that they're seeing right now, or at least the headwinds that they're seeing, I should say, within manufacturing. And I believe what he had mentioned to me is that some of the maintenance is stretched. You're seeing some of the aircraft reaching or getting closer to maturity, and this is going to be a several-year process to try and fix. How much of an overhang for the entire industry, Delta included, is that?
Yeah, I think it's important to note, as you do, that this affects more or less the entire industry. Southwest has a unique exposure to Boeing aircraft, but in general, new planes are delayed, even from Airbus. And so you'll just see them holding on to some of their older planes for a little longer. Those planes are a little more expensive to run, a little less fuel efficient. And then, they require maintenance that is also then a little harder to come by with higher maintenance costs and part shortages in some spots. So, but that's just a little bit of friction, let's say, that the whole industry will experience.
All right, Nicolas Owens, Morningstar Industrials Equity Analyst. Thanks so much for joining us here this morning.
Thanks for having me.